Thanks for joining us today on Market Call. I'm Marella Fernandez. Brendan Caldwell with us on the show, President and CEO of Caldwell Investment Management, taking your questions today on North American large caps. Here's how to reach us. 1-855-326-6266. If you're dialing in, you can send an email as well, marketcall@bnnbloomberg.ca. Thanks for coming in.
Marella, always good to be here and on a sunny day. What a day to be alive.
It's still cold. North American markets, as you know, have been reacting hourly to what's going on in Iran. Besides that, if you're taking that sort of out of the mix, what do you think has been supporting the markets to date?
I think one thing is that political events in general have at best a temporary effect on the market. I mean, the defining political event of our adulthood, my adulthood, your life, was 9/11. And the markets closed 2001 higher than they were on September the 10th, 2001. So markets do tend to absorb, take things in stride, and then move on fairly quickly. Now, the conflicting information coming out of Iran that the Iranians are saying, no, we're not talking to the Americans. We don't want to talk to the Americans. And the president saying, no, we're having discussions. Top men.
Yeah.
Top men. Like the end of Raiders of the Lost Ark. I don't know how to say this well. Of the two, I believe the Iranians. So, but the market seems to be taking whatever reassurances are coming out of the White House to be closer to the truth. I don't know. I don't quite understand.
Perhaps investors want to see optimism and are looking for the optimism, and so are taking every little bit they can get.
As that great New York philosopher Paul Simon saying, a man hears what he wants to hear and disregards the rest.
Exactly. Let's talk about energy stocks for a moment, because, of course, they've been on a tear during this conflict. Are you in energy? Have you trimmed at this time?
Yes and no. That is to say, yes, we're in energy. No, we haven't really trimmed. I think this will, as the wags are saying on the internet, the difference between this present conflict and the Vietnam War is that President Trump knew how to get himself out of the Vietnam War. So this will continue on in some way for a bit, and even if it doesn't, I mean, the bigger problem for energy prices would be if there was a slowdown in the economy driven by higher interest rates. And I think the president would very much not like interest rates to start ratcheting up in the 6 months before the midterm elections, because the free hand that he has enjoyed the last year and a change running the U.S. as he wants to would be a little bit more difficult if the Republicans didn't have both houses of Congress. So I think higher interest rates would be the enemy. And if the U.S. manages to keep interest rates low, that'll be a much bigger determining factor than whether this conflict even carries on.
Okay. You mentioned, for example, you aren't trimming in energy stocks. You're using the dip to pick anything up?
No, I said we're not really trimming energy stocks. We've been actually just we've been fairly heavily weighted in energy, in particularly our Canadian portfolios. Now, it would be really, really nice if Canada had already put in place the business case to get our energy more to the world market, as opposed to having it largely just pumped into the U.S. But no, there's still a lot of areas that we like in financial services, which have been a little bit weaker here, but should continue. The AI, I think we'll probably talk about some of the most boring companies in the technology sector among my top picks and past picks. So a lot of those companies we still very much like.
Okay, let's take a quick break then. We will line up the first phone calls for Brendan Caldwell of Caldwell Investment Management. They'll take your questions on North American large caps. Here's how to reach us. Back in just a moment. Welcome back to Market Call. We're going to start right now with an email from Jeremy. He says, I'm wondering what the guest thinks of Capital One Financial. We'll have a look at the Capital One chart in just a moment. Brendan, are you familiar with it?
Well, yeah, I mean, I think we're all familiar with it from the Discover card, which they took over almost a year ago. So and from the ads, what's in your wallet?
Yes.
So I am partially disposed to companies that are able to have advertising and promotion that really resonate and just stick with a person for an awfully long period of time. So that they did a good job of that. It's an interesting business in as much as financial services have pulled back a little bit here in the beginning of the year. Capital One, I don't think, is any exception. And the question is, where for the consumer? I mean, in the United States, my understanding is the consumer is much less leveraged than maybe they had been, say, well, obviously before the financial crisis, but at different times in their history. But should we see an economic slowdown, it's the more credit-oriented auto loan, consumer debt tends to get hit the hardest. So if we were to see a tick up in interest rates, by a tick I mean a significant elevation in U.S. interest rates, I think the U.S. economy and the U.S. consumer is still very vulnerable to that. So I think it really depends on one's view. It's not one that we own. We have other financial services stocks in the portfolio, but I think it is like we have Visa and MasterCard, for example. But it is a way to participate in the financial transaction business. And if you happen to have a more positive view of the U.S. consumer, you'll probably do well.
Okay. Would you pick it up at the level it is today? Because it's off. People are probably thinking, is now a good time to pick it up?
If this is one you wanted, like let's say you love your Discover card, I would own it if you use their products. I really am a big fan of investors buying what they really love. I loved a video game called Civilization. And it never really occurred to me that the beginning of Civilization, I played it 20 odd years ago, it says powered by NVIDIA. Gosh, I should have bought that stock 20 odd years ago. So if you love a stock, or if you love a product, own the stock.
All right. Let's get to our first phone call then. Jim on the line in Brooklyn, Ontario. Jim, go ahead.
Hi, good afternoon. I guess this is along the same lines, but I want to ask you about Amex. I know you just talked about some other credit card type companies here, but just specific to them, you did mention there's been a pullback. I mean, small sample size, but they're down over 19%, year to date here. Could you see this as a good buying opportunity for them?
You mentioned MasterCard, you mentioned Visa. How do you feel about American Express?
Well, American Express is, as the name implies, very much more an American focus. Visa, MasterCard, considerably more international, and that can be a good thing or a bad thing depending on one's view. I mean, it is very much the third player. The one we just discussed, Capital One and Discover, would be a distant fourth. It wasn't a close finish to get the bronze medal. But even Amex is a distant third to the big two in the industry. So our preference has been the larger financial services type institutions, and so we're more on the MasterCard and the Visa rather than Amex.
Is there any benefit to being with American Express as opposed to Visa or MasterCard?
Oh, as a card holder? Yeah, I mean,
as an investor.
As an investor, if you want to have a greater American focus, Capital One, Amex, they would be your better bets. If you said, I like the quality of the U.S. consumer, I think that they're going to do well going forward. I don't want to have exposure to Europe. I don't want to have exposure to Asia. I want to be more focused on that. The thing, though, is that where credit card companies make just some vast percentage of their money is on the foreign exchange. And so, they make money doing the transaction. That's fine as far as it goes. But actually doing the international transactions is actually incredibly lucrative business.
Which makes sense. Okay, let's get to our next caller then. Terry is on the line. He's in Edmonton with his question. Terry, go ahead.
Yeah, my question's on Thomson Reuters. They seem to be doing okay, but the stock is going downhill. Thank you very much.
Thank you for the question, Terry. Thomson Reuters got hit by the whole software concerns and AI. It bounced back a little, but not compared to where it was. What's your outlook for Thomson Reuters?
Well, I think it'll be interesting. I do think that companies, so Thomson Reuters is if you go back 30 odd years, when I was basically a child in my mid-20s, one of the first companies I covered was Thomson Corporation, which at that time, one would have thought Thomson Corporation, well, newspapers.
Sure.
That's how, it's Lord Thomson of Fleet Street being the main area of London where all the newspaper companies are. In the mid-90s, they said, yeah, we're not in the newspaper business, we're in the information business. And information is how we made money selling information through newspapers, but then we're going to get into, Reuters was a later acquisition, but medical information, law information. And I think that the general consensus has been, now that we're in this era of AI and information has been much more commoditized, to the extent that you have proprietary data, data will be king. So if you have, in the early days, it's been sort of many babies have been thrown out with much bathwater. I think Thomson Reuters and a number of the other companies that have this proprietary information will probably do better than the market fears. So it's one actually we have owned and will probably continue to do well going forward. And the long-winded story was just the company has a history of reinventing itself, and the move from electronic media where it was to using AI or incorporating that in their business is not such a big jump as people think. Certainly not as big as going from newspapers to electronic media, which is a change they made in the 90s.
Okay, so we could expect some new reiteration of Thomson Reuters, which will bring the stock back up. Let's go to Sam in Ottawa. He's got a question. Sam, go ahead. Sam, are you there? Okay, we may have lost Sam. Can we move on to Jim in Peace River with a question? Jim, go ahead.
I'm wondering about Baytex, please. I know they're doing great up here in the Clearwater, but their share price, that's what's bothering me. They're drilling great wells up here. Do you see their share price increasing over the next year or two? Or what do you see happening with their future? Thank you very much.
Okay, crude oil, natural gas. We talked a little bit about energy. What about Baytex?
Yeah, that's actually really interesting, Jim, in that if you know more about a stock than the rest of the market, that's not in the technical sense insider information. If you're seeing all the work they're doing and you think it's going very well, you have a real inside track on the rest of the world. It's not a bad thing. You're allowed to know in Peace River that Baytex is doing great things, production's going great, and it's going well. It's not the one that we've owned. We've owned Peyto, Sparta, Tamarack, Synovus. So it's not the one we've owned, but Jim, I don't know how to say this. I'm going to take a tip from you and go back and have a look at it. So I do think that the energy sector is probably quite sustainable. The stock, I know you said it's not doing well. I guess it's just been perhaps in a long-term trading range. It hasn't really broken out to new highs the way a lot of them have. But that's just interesting information that it's doing well, and I'll chat with the team about it.
Okay, there's no overhang on it that you know.
I'm aware of. No, but doesn't. It's not one that we've followed or owned. But it's just interesting when someone says, "I'm in Peace River. I see the work they're doing. It looks fantastic." Then, yeah, I think it's worth a look.
Okay, let's take a quick break. We're going to be back with Brendan Caldwell Investment Management. Again, he's taking your questions today on North American large caps. Here's how to reach us. We're back in just a moment. Stay tuned. Welcome back to Market Call. Philip's on the line. He is in Toronto. Go ahead, Philip.
Good afternoon. My question today is about Urbana. I have done very well holding Urbana over the years, and I also believe that there is some mineral interest and with perhaps gold amongst some of the properties or investments that they hold. The price has pulled back, and now I'm just wondering whether it's a good time to be adding to my position. I shall hang up and listen. Thank you.
Thanks, Drew, for that question. So this is an investment company?
It is. It is an investment holding company, trades on the Toronto Stock Exchange. And I don't know how you put this up on the screen. I am massively conflicted. Our firm, Caldwell Investment Management, is the manager of Urbana Corporation.
Okay.
It is a combination of private equity holdings and public securities, largely focused in financial services. Philip is correct. It began life as, and I'm not making this up, Macho River Mines. Now, which is a bit of an exaggeration. Whether it was macho or not is neither here nor there, but it's never actually owned a mine. It does own a gold property in Urban Township in Quebec, hence the name. Its main investments, though, are things like it owns half of the Canadian Securities Exchange, which is a rival to the TSX Venture. It owns Blue Ocean Technologies, or a large chunk of Blue Ocean Technologies, which is the alternate trading system that allows for overnight trading of U.S. stocks. It owns a majority interest in Tetra Digital, which has a subsidiary that's the trust company. It's the only licensed Canadian custodian for crypto assets. So it's doing a lot of interesting things in private equity in the financial services space. I'm not going to comment whether you should buy it or not, but I am a very large owner of the stock and continue to acquire it for my own portfolio.
And have been for a while.
Yeah, and my family owns quite a lot. It is one which I'm wildly conflicted and positively disposed toward.
All right, let's get to Elliot then. Elliot's in Hamilton, Ontario. Elliot, go ahead.
Good afternoon. TKO Group punches up to 200, 215, 220, but then it always falls back to the mat around 200. But now it's broken through. Is TKO down for the count, or would you start a position today? Thank you.
Okay, it did get up to 225-ish, it looks like, some time ago before falling back down to 192.
Sounds like my weight.
Oh, there you go. Too much information.
I could have this a breakdown like that. It's Lent. I'm doing the best I can. Now, TKO, which is a great name, it's of course short for technical knockout, but it's the holding company for WWE, Worldwide Entertainment, Pro Wrestling, and also the MMA, the mixed martial arts. And it's one that we have owned. We don't own it at the moment. And I think on a recent show, maybe as recently as New Year's Eve, I was on the show here, we have owned it. I think we sold it because it got extended on the valuations. So we don't hold it in our portfolios at the present time. But certainly, again, if you love the company, if you love the product, own the stock. And if pull back on this, sports, I think is going to keep being a big deal. I think it'll keep being a big deal until gambling eventually blows it up. Not TKO in specific, but sports in general are going to have a problem with this gambling. It's going to be a thing that eventually
gets reined in.
Well, there's something, or there'll be a massive problem. Like, I'm not saying they'd ever fix the World Series because that's never happened before. But I'm not saying the last World Series was fixed. I'm not saying, but I do think that the sports will continue to be a growth industry for the foreseeable future. So if you like the company, buy it. We don't own it at the moment, but we have for most of that run up.
Elliot had that question. Let's go to Dinesh in Burlington, Ontario. Dinesh, go ahead.
Hello. My question is about Metro Inc. MRU. I'm down currently about 7%. So at this point, would you consider it a buy, hold or sell?
Okay, sorry, I don't know Metro Inc.
Sorry, Metro Inc.
Metro Inc.
Yeah, I think he's talking about the food company. Yes, the competitor to Loblaws and that.
Okay.
I think that's the question.
Okay,
yeah.
Go ahead.
It's not one that we own right now. The food business has politically come under a lot of pressure because of gouging, or the perception that they are gouging the public because inflation has driven up food prices. The cost of energy going up is going to cause a rise in food prices. So there's a lot going on there. Loblaws has been one that we have owned over the while, not Metro so much. Loblaws has been a bit of an energizer bunny, and it's kept going and going. So for us, our preference in the sector is the Loblaws.
Just on growth and where you see it going?
Growth and being the dominant player, and particularly in Canada, we do tend to favor the biggest tend to get bigger.
Okay.
So yeah, that's the one we have owned.
But it's not that there's anything specific to Metro that you don't like. You just prefer to hold the bigger players.
So I think there's a whole. The bigger players have something of economies of scale when it comes to supply chain, prices, everything. Metro has got a great niche and has got great properties, but we prefer the Loblaws.
Loblaws. Okay, let's get to Jacob. Jacob's on the line in Toronto. Jacob, go ahead.
Hello, yes, good afternoon. I'd like to ask the gentleman about the Brookfield Corporation. Just if it's to buy, sell, or hold. And thank you very much, and have a nice afternoon. Bye-bye.
Thank you for the question. Of the Brookfields, let's talk about Brookfield Corporation. Is that one you like out of the Brookfields? Do you like any of the Brookfields? Well,
there are so many Brookfields. It's hard to keep it all track. Everything from clean power to the investments. They come in different classes of stock. So it's all a little bit much. So yes, the determining factor Brookfield is largely about property of one sort or another. It could be property that generates energy. It could be property that's office buildings. The determining factor when it comes to property is interest rates. The concern, and this is, I think, largely with the pullback we've seen, is that if we do see higher interest rates, in the autumn. I think that's unlikely. I think interest rates are going to stay low because don't fight the Fed. And the U.S. president is about to appoint a new U.S. Chairman of the Federal Reserve with this expressed view of trying to keep interest rates lower. He's been pushing Chairman Powell, the current head of the U.S. Federal Reserve, to cut rates. He keeps calling, I've never seen this before, where he's taunting the chairman of the U.S. Federal Reserve. Oh, he's too slow, Powell. I think he may, I'm sorry I'm not answering the question directly, but I think interest rates are the determining factor when it comes to real estate, Brookfield included. In the real estate business, one we actually own is a company called Granite REIT, which owns a lot of the industrial properties, both in and around the GTA, but also in that belt, Florida, Texas, that is really growing very rapidly in the U.S. So our bet in the property space is actually specifically the most boring of businesses. You don't think of it's not like an office towers or even rental properties. It's the industrial space.
Okay. Let's take a quick break then. We have past picks from Brendan. When we come back, stay tuned for that. Welcome back. We're going to go through past picks from Brendan, April 3rd of last year, just before the tariff noise, but the tariff noise was already kicking up before Liberation Day, actually. CBOE was one you chose at the time, CBOE Global Markets. At the time, 225.80 U.S. and up to 281.29 today. So 25% return, 26% total return. Is this a stock that you have held on to? And do you remember what you liked about it back then?
I liked about it then. I liked about it now. But actually, we were... through the various funds and entities that we had, the largest holder of the Chicago Board Options Exchange, which was the original options exchange in America. We were the largest owner of that when it became a public company in 2010. We lobbied for it to become a public company. So we've been owners of the CBOE since 2006, 2007, while it was a private entity, and we continue to own it. The reason the CBOE in particular does well during markets like this is one of its most lucrative products. Its most profitable products are all proprietary, like the S&P 500 options and the futures that trade on those options they license out. But the one that's really profitable for them is called the VIX, the Volatility Index. They own that, and they can charge almost what they want on this very popular product. And when the world is bizarre, to use the technical investment term, I'm sure I learned in the CFA, when the world is bizarre, the CBOE makes just tons of money trading because of the volatility. So when the world is bad, the CBOE does particularly well. It's a counterintuitive, but it's one of the few exchanges that really benefits from volatile markets in this way.
And I just should correct myself. April 3rd was the day after Liberation Day. So already things were going haywire there.
There's nothing like doing one of these hits at the bottom. On the day, it's painful, but a year later, it looked like a genius.
Yeah, there you go. Let's see if that continues. Amazon was another pick last year. AMZN, 178.41, now to 212.21 US, 19% upside, a 19% total return. This could have been more of a crapshoot because the Mag 7 have been pushed down so much over the last number of months. So do you still like it? Are you holding it?
Yeah, we do. It was one of the stocks, it was seen as an AI laggard, which may have been the case, but AWS has been really the biggest money driver. Now, that's surprising because my two 20-something-year-old children are down in Niagara with their mom this last couple of days. But I remember them because the packages keep arriving at my front door.
Yes.
So I don't know how Amazon doesn't make money from its retail business. Apparently, that's a pretty low-margin business at the best of times. But it's actually doing very well because they've caught up considerably on the web. So we still own it. Still think it's going to be a winner going forward. Because if you think about it, it's easier to figure out how to use a new tool with your existing business than to have to reinvent your entire business. So it's much like I argued about Thomson Reuters. Figuring out how to use AI in the information business is not as hard as getting into the business in the first place. So the dominant players that are already there, if they can incorporate AI as a new tool and not see it as a rival or competitor, they can continue to do very well.
Let's get to your third pick then. Costco, COST on the NASDAQ, 967.08 at the time, which was April of last year, to 972 at 26. So 66, excuse me, but not a lot of change here. But that's a more recent move for Costco, with many people worried about valuation, I guess, as well as the state of the consumer moving forward. What are you doing with Costco?
We'd actually sold it back in October, so probably a little actually lower even than where it is right now. But that's okay, because your screen showed I was 3 for 3 on the win column. So
sure.
That's, even if only one was.
What made you sell it?
I think your point exactly was valuation. So we had felt that it's got a great business model, and it's done very, very well. Again, it's a product that our family uses quite a bit. Mm-hmm. They make the best pancake mix, by the way, but it was sort of overdone from that perspective, so we don't own it at present.
All right, that was Costco. Let's take a quick break then. We'll get to more of your phone calls for Brendan Caldwell of Caldwell Investment Management when we come back. Stay tuned. Welcome back to Market Call. Bill is on the line. He's in Bowmanville, Ontario, with the question today. Go ahead, Bill.
Thank you for taking my call. Some time ago, you recommended Comfort Systems. I bought it. I've done very well. Do you still like it? Would you buy it today if you don't own it? Thank you.
Thank you. Is this a play on the AI data center build-out?
Yes, exactly. Okay. It's the most. Our play on AI is generally the most boringest businesses on this planet of Earth. Comfort Systems makes air conditioning. If you wonder the singularity hasn't happened yet or not, they spend more money keeping computers comfortable and cool than they do on human beings.
Yes.
So, so Comfort Systems is not your comfort or my comfort; it's the comfort of the servers. So, given that the massive server farms and everything are being built out, this stock got hammered a year ago, January, when DeepSeeked all of the AI stocks, because apparently China had come up with a $6 million strategy for creating AI. So maybe all these server farms weren't necessary. Maybe this will all be done on the cheap. Apparently not. So yeah, Comfort Systems has bounced back. It's actually the single largest holding in our U.S. dividend advantage strategy. So yes, we still like Comfort Systems. Yes, we're still big holders. And yes, if we had, anybody that buys our U.S. strategies, we would own it for them.
Comfort Systems. All right, that was for Bill. Let's go to Peter in Vancouver. Peter, go ahead.
Thank you. My many friends here and I have been watching Market Call for 10 years. It is a great show with many great hosts and great guests.
Thank you.
The ladies today vote Brendan Caldwell as the most attractive and profitable and best.
Your speech is tremendous, Peter.
Manager.
Thank you.
What's your question, Peter? Go ahead.
So, Brendan, the ladies want to ask you, CIBC. Thank you, Brendan.
Thanks for the question. Okay.
God bless you, Peter. My biggest fan I've never met. He lives in Vancouver apparently, and he calls in every time I'm here. So the banks have had a bit of a pullback. Our favorite bank is the Royal Bank. It is the 800-pound gorilla, no mistaking it. It dominates the bank lobby. It dominates the rest of the banks. It is the biggest, the baddest, and there is a propensity in Canada to have a first among equals. So the Royal Bank would be ours. CIBC had a good rally last year. All of the banks did. I guess my bias, my concern about CIBC is that it does have this weird propensity to just do something, what's the technical term, dumb. And it can be just at different stages. It tends to shoot itself in the foot more than the others, but that's just my own bias. So anyway, our favorite bank is Royal Bank of Canada because of its dominant position.
Royal Bank. All right, let's get to Glenn in Toronto. Glenn, go ahead.
Thank you for taking my call. I would like to know about CGI, the Canadian software company. Would this be a good buy, or is AI going to eat its lunch?
Okay, thank you for the question. Where are you standing as far as software goes, and are you being sort of pickier about where you're putting money into software, or are you putting money into software?
Yeah, so we actually do own CGI in our strategies, because I do think this business that all consultants are going to be out of work, all software is going to be out of work. I just don't see it happening. I mean, I do think, and we're going to come to this later with Google, but I do think the incumbent providers are going to use this as a tool. It's not as though, I mean, think of my line of work. Why am I necessary? If you look at the wealth.
Let AI figure it out. Yes.
Yeah, sure, you could do that. The problem, again, I can only say in my profession, if everybody ends up doing the same thing, well, that creates a whole risk in and of itself. The Connor Clark fellow that you had on this morning, he was great because he really spoke very well about the problem with private credit. Mm-hmm. Things make sense when only a few people are doing it. But once everybody starts doing it, it changes the river. It changes the nature of the investment itself. So too, if everybody starts doing a one thing, it changes the underlying thing entirely. And AI, I'm not sure, is able to understand that.
So you held on to CGI,
yeah,
obviously?
we own CGI, yes.
And you think there's a comeback for it?
Oh, I think so, yes.
All right, let's get to Dennis. Dennis has written in an email. He says, I'm looking for the guest opinion on GFL Environmental. My position is currently down about 4%, and I would appreciate guidance on whether this is a good time to sell, buy, or hold. GFL does basically disposal services, I would say.
I know.
And it's pretty steady business, I imagine. It's not like we're getting rid of less, but if it's down a little bit, you expect a comeback? Is it
But that's not the story with GFL.
Okay, what is the story?
They're shooting up my neighborhood.
Oh, okay, that's a different part of the story.
Well,
yes, I remember
sort
that.
of. Like 2 nights ago, the executive house just north of me is subject to gunfire. There have been fires set at their properties out in the West End. I'm not saying that Waste Management is the Sopranos North, but it's all a little bit odd.
Do you think that's what's dragging the stock
No,
down?
I don't think so, because I think the whole sector is underwater. I think that is very specific. But I think I'm surprised people haven't asked me about Air Canada. It's just one of those stocks where things can't get worse. Knock wood, please. But yeah, so we actually own Waste Connections, a competitor of theirs. So yes, there is. It is a challenging sector to be in right now.
Why is that? Again, it seems like one of those sectors that you can't really go wrong with because we're all getting rid of stuff all the time.
Yeah, well, I think when it comes to GFL, it's about the debt. So they took on a lot of debt. It's when a lot of these businesses are roll-ups of an industry. As they expand and expand and expand, they take on debt. It's a way of doing it. I think that part of the issue that has weighed on the sector is the amount of debt. If you're going to see a much higher interest rate environment, I think that's going to be an issue. But again, I don't think interest rates are actually going to go back up. I think they will move past the debt issue. So I do think, notwithstanding all of the craziness that's going on, particularly in Toronto associated with that stock, it should have a turnaround at some point here.
All right, let's take a quick break, then we'll get back to more of your phone calls and your emails when we come back. Stay tuned. Welcome back to Market Call, and thanks again for joining us. Tim's on the line. He's in Mississauga, Ontario, with a question today for Brendan. Tim, go ahead.
Thank you for taking my call. I was just wondering how you felt about TELUS for the future. Like, I think they've changed CEOs and maybe turned a page. And do you think they would have a brighter future soon? Thank you.
Thank you for the question. A lot of people have held on to TELUS for the dividend and like it for that.
I had TELUS for years and years and years and years on my phone. I really liked dealing with TELUS. And then my IT people made me switch to the parent company of this network, Bell. So I do think there is, they said, look, it's just so much cheaper. I absolutely have to go to Bell. It's not an advertisement. It's just what happened. So I do think there is pricing pressure in the sector. It is not a sector we own. I don't own Bell. I don't own Rogers. I've been looking at Cogeco, which is not quite the same thing, because it might be a takeover candidate. I don't think there's an appetite for another big telco merger in Canada anytime particularly soon. So I don't think TELUS is really a takeover candidate. But in that sector, I would sooner a Bell or a Rogers probably. I think when you had a stock that's been in decline for that long, it's probably, like TELUS has, it's probably going to base for a while. Historically, they tend not to turn around on a dime. Bigger organizations do take a while for both the turnaround to happen and then for the market to realize it's turning around.
Okay, that was for Tim. Let's move on to Dimitri, Markham, Ontario. Dimitri, go ahead.
Hi, Morella. Hi, Brendan. Brendan, I was just wondering what you think about Constellation Software. Do you like the management? You think they're going to turn things around? Good for a long-term hold, maybe? Your thoughts, please.
All right. This touches on the software considerations already. Do you like Constellation? Have you ever held it?
Oh, yeah. We held it for years and years and years and years. It's been particularly our value momentum strategy, which combines, well, as it sounds like, value and momentum together. So stocks that aren't too expensive that the market seems to like, and we ran it with it for years, but we haven't owned it in some time. It's a roll-up story, and when I say roll-up, I mean it buys up companies in the software business and adds to it, and then you can buy a private software business for, say, single-digit multiples to earnings, and you can then get a valuation of 10 to 12 multiples to earnings, or some massive step up when it becomes part of a public company, and that's how the game works. But at some point, it tends to run out of steam. We've seen it in Canada in industries as diverse as school buses and, well, as you see, software. But yeah, it's got hit really, really hard because the valuations were so high based on the fact they'd be able to do this indefinitely. So it's sort of a double whammy here, both the high valuation and the concern that software is going away because we're just going to talk to the computer and you and I can write our own software programs. I think that's still a ways from happening. So probably it will have something of a bounce as cooler heads prevail, but I don't think it'll maybe go back to its old highs with, like, I wouldn't expect it to get back to the same price that it was.
Would you move your money elsewhere then if you were a holder right now? Would you take the loss?
Yeah. One's first loss is usually the best loss. And it will probably, so I can't tell the man what to do.
Okay.
But I do think that it will be a while before it has a bounce.
It depends on how much patience you have. Okay.
Yes.
Let's go to Sam's email. He says, what is your view on Microsoft? Similar kind of entity with software, but has embedded Copilot in there, which is sort of offset, I imagine, some of that concern. However, take a look at that chart. What would you do with Microsoft?
Yeah, I still own Microsoft, and I think it will continue to be the 800-pound gorilla that it always has been. Again, I think, and it has been a big investor using its massive war chest of cash to invest into AI. So I do not think that corporations that allow us to, that's probably a terrible way to phrase it, but that's probably true, that enable us, maybe a better way, to actually interact with technology are going anywhere anytime soon. And Microsoft missed the internet originally. They missed it. Bill Gates has said as much, but the fact that they were on the desktops allowed them to buy their way back in.
To benefit from that,
yeah,
yes.
So they bought their way back into it. So I do think that whatever the next trend is, Microsoft has a very good track record of buying its way back into it. Again, I don't think this or any of the other tech companies that have corrected are going to see them back at their new highs, before the end of this year. But if I'm wrong, I'll be very happy.
Okay, good to know. You're a holder. Let's take a quick break. We will have new picks from Brendan when we come back. Stay tuned. Join us tomorrow for Market Call. Eric Nuttall will join us on the show, senior portfolio manager, 9 Point Partners. He'll take your questions tomorrow on energy stocks. And let's get new top picks now from Brendan Caldwell. We're going to start with APH on the New York Stock Exchange. Amphenol, tell us what they do.
Again, sounds really high tech, and it is in the tech sector, but it's so boring. I could say they allow for the interoperability of communications devices, which is a really fancy way of saying they make cables. They make the little things that go beep. They translate real world sensations like your engine is overheating or your cell phone is overheating to a usable signal. And they're a really neat business. There are 140 different little mini businesses that are allocated capital and are run semi-autonomously, so that they have a much more entrepreneurial structure than might be otherwise achievable in a big tech company. So they are a really neat business, but does essentially really boring stuff, but in an area that's growing. And so you don't get to 140 businesses by starting them all. It's, again, this roll-up strategy that I was talking about, where you acquire businesses and bring economies of scale and a whole marketing department behind it. So Howmet Aerospace, it does a whole bunch of different things.
That's your second pick, just to be clear.
Oh,
Amphenol is what we're talking about.
Amphenol, sorry,
but
apologies.
I'm also wondering who their clients are for Amphenol.
Everything from aerospace, everything. Anybody that makes computers talk to each other, from medical devices to defense contractors.
So quite a varied base.
Basically, yes. I wouldn't even be surprised if they're allowing me to talk with your
producers and
everybody today.
Team.
So yes.
Okay. So they've got their hands in a lot of different pies. Let's get to the aerospace pick, which is Howmet, HWM on the New York Stock Exchange. What do you like about the company? And tell me a little bit more about what they do.
It's boring in that it makes the stuff that makes everything run.
Okay.
How to think about Howmet: if it spins, they probably make it. So they make the turbines for jet engines. They make the
parts. Do they make other parts, or is it generally turbines that they?
Yeah, they would make turbines for power companies. They make the wheels on 18-wheelers. So
how long have you been interested in them?
It's a relatively new acquisition for us. I think this year or late last year. I don't remember the exact date. But again, it's got a very large backlog. It's a very high margin business, and the sectors that it services, particularly power generation and aerospace, are still growing at an exponential rate.
Okay, that's Howmet Aerospace. Let's get to your third pick. Your third pick is one of the Mag 7, which is Alphabet Google on the NASDAQ. You already own Microsoft, I think you mentioned, right?
Yeah.
So what makes you interested in Alphabet, and have you already held it for a long time?
Yeah, held it for a very long time.
Okay.
It is probably my favorite of the big 7. Because the thought was, well, this or that or the other technology is going to replace Google.
Search, absolutely.
Yeah, it's going to replace search. But if you've seen Google over the last little while, it's just adopted the AI, and now it gives you a perfectly good. You type in whatever you want or ask it whatever you want.
Nobody saw that coming, right? Nobody saw the iteration of how they were going to use AI.
Yeah, but this is my point about transitioning a new tool into an existing business model is a lot easier than learning to monetize it in the first place. They're the only ones that really have distribution at scale. So they're fully integrated from developing the AI, from the hardware, and then, of course, just the distribution. They are the incumbent provider, and they have been for 20 plus years. Literally, they're a verb. You Google something. So that's not going away. So to learn how to monetize AI and start to make the kind of Google kind of money from it is a way harder than making the Google kind of money and saying, oh, yeah, thank you, we'll take that and we'll just put it into our business. So,
is there something else you like about them, that they're growing beyond search, or is that the primary reason you are staying invested in this one?
I think that they will, far from being supplanted, I think they will be next level dominant as we emerge from all this. So given the pressure the Magnificent Seven has been under that we've talked about, I think they're going to be emerging as the lead player.
Brendan, got to leave it there. I'm out of time. Thank you for joining us today.
Thank you. Great to be here.
And thank you for joining us today on Market Call as well. We'll catch you back here again tomorrow.